Hello, good morning in Europe, good evening in United States. This is Ahura with another daily outlook video. As you know, in this series of videos, we're looking at the market, what's happened in the market, what is going on, and what is our expectations for today in the financial market. Let's end the week with reviewing what happened in the market, especially what happened, what did the central banks. As you know, this week was the week of the central bank, and different central banks all around the globe, they had a monetary policy meeting. In general, they were dovish. They were hawkish. In general, they were hawkish. The decisions that they made, most of them mostly were expected decisions, and we were expecting to see and go to this direction. Let's start with Central Bank of America, with the Federal Reserve. As you know, the Fed decided to increase the tapering level up to $30 billion a month and have at least two or between two and three rate hikes in 2022, which was mostly expected. That's why it was not shocking in the market and caused this free fall, as you know, here in the market, and you can see these candles right after the meeting and decisions. However, this policy is the hawkish policy. This policy should put some pressure on the market, especially before year end. So now starting to have the real reaction in the market. This correction that we see here is the real reaction that we can see from the weeks. This is the weeks. This is the risk market risk, sorry, I told the US dollar. This is the risk and market risk. Same thing happened in the US dollar chart. US dollar lost the ground right after the meeting. And now you can see this correction. The correction that we can see here, that we see that the US dollar is still trading in an uptrend, in a general, daily move, daily chart. Any number above 95.50 in the short term and above 94 in a long term still supporting the bullish tendency in the market. US dollar still can increase, or at least can help itself to hold these levels. About the US dollar and this hawkish policies, in a short, actually, that's the expectation of the short term. Let's go to the stock market chart. Let's see S&P 500. With these hawkish policies, at least in the short term, by year end, expecting to see the higher numbers again is a little bit optimist. You know what's happening in year end. You know what is usual. And now we have the hawkish policies, extra hawkish policies. Therefore, expecting the higher numbers in the days with this. But in these days, with current decisions of the central banks, it's kind of, but it's so optimistic if we see that, okay, let's go and see the numbers and see the new all-time high and stuff like that, it is a little bit, to say, it's like kind of, see, really it means that we are really optimists in the market, which I don't want to be optimist in the market. I want to be a realist in the market. Therefore, these policies will support the market just to have somewhere around us. This is the central bank's policy in the United States. Like the same chart we have almost in NASDAQ, same chart almost we have for Dow Jones. So Dow Jones, NASDAQ, and S&P 500, they started to have some correction, and I think that mostly we will have the same levels with a little bit downside tendency, but the side movement with a little bit downside tendency, because at least we can, at least we have a little bit more less chance, let's say like that. We have a less chance for the bullish than having for the bearish. So therefore, with the sign that we are getting from the market, with the decisions that we saw from the central bank, with the date that we are in at the 17th. December 17th, all of them, they are telling us that being optimistic is a little bit, but being a little bit optimistic is not the real. Being optimistic is not the real at the moment. So based on the central bank decisions, based on the Federal Reserve decision. That's what we can see here. Yesterday we had let's just start from the first. We had the meeting of Central Bank of UK, Bank of England. The Bank of England was the first bank in a G7 that started rate hike with 0.15%, or we can say 15 basic points, and increased the interest rate to 0.25 percent. So the decision was hawkish enough. Let's say about the, let's say what it was that is what happened there. Until 2 weeks ago that we didn't have any news from before having any news from this new variant of coronavirus, Omicron. We were widely expected to see the Bank of England to be hawkish because already we had in our last meeting this expectations we had in our last meeting. And in the last meeting we were dismissed with not having a hawkish policies, not having tightening policies from the central bank in the UK. Therefore, all these expectations moved to December meeting. This month, before having any news from Omicron, we were widely expecting to have the more tightening policies from the central bank in the UK, which didn't, which were the chance of these expectations came down after having the Omicron variant, after the UK become the first developed countries that have some restrictions for the COVID-19 variant, with this new variant of COVID-19, many restrictions that they made for before year end, before holiday events, before New Year Eve. So that was the reason that we had less expectations for the hawkish policies. So what happened? Again, but yesterday I wrote, yesterday morning when I was talking, and also in the article that I wrote and published in a website, I talked about that possibility of hawkish policies that we can again have in the central bank in the UK with another rate hikes. So that happened. With 0.15%. That's what exactly that I was waiting. So you can see that in the article that I published in a website. The reason was supporting the pound sterling is increased. So it was the market expectation, but we had a less chance for that. I mean, the chance that actually I was also expecting, it was much lower, but still it was a chance. So that happened, and it was a little bit hawkish. This hawkish policy from the central bank in the UK, as the first G7 member that increased the interest rate, put the pressure on the UK 100. UK 100 or FTSE is a little bit under pressure, but what is fact? We have 7,200 still as a K support here. GB 100, UK 100, or FTSE, whatever we call it. If we go to the daily trend, we can see that downside, the downside trend line is breached, and now we are in a hawkish. We are in increasing. I mean, the prices is in a bullish trend. From the technical point of view, 7,200 is the K level here. We're almost the 50 and 50 day and 20 and 50 day moving averages. Let's go a little bit higher. This 7,222 is the very exactly 20 and 50 daily moving average. They cross each other. EMA crossing strategy is talking about the downtrend, but the downtrend trend line, downside trend line is breached, and we can see the prices are increasing in general. From technical point of view, we can see this uptrend here. However, that's started from the technical point of view, but still there are some doubts. Because the RSI at 50 OBV trend line is going nowhere. But we have a hawkish policies that will put more pressure on stock markets. Therefore, for the GBP 100, for the UK 100, for FTSE or whatever we call it, we are waiting for some correction in the last days of the market, this year. But uptrend for the next year is widely expecting. Let's go to the euro. What's happened in the euro? Eurozone. European Central Bank also had a meeting. European Central Bank took the first step for hawkish policies, saying that we are going to end the PPP, pandemic the emergency bond purchasing program that they were having. They used to have in the past 2 years. They are going to end it at March, the middle of the March, I think, or end of the March, whatever. It was the first hawkish decisions that the European Central Bank they made. It was widely expected. I mean, in general, in the market, it was widely expected. The market was expecting to see this step because all the central banks they are making the hawkish decisions. European Central Bank, even if they don't want to increase interest rates, at least they have to take some step because inflation in the eurozone also increasing while the unemployment rate fell under 5%. So therefore, they're expecting a hawkish policies from the central bank when they almost reach the goals. Almost, it was widely expected to see. Therefore, euro increased a little bit against US dollar. Also, we can say that increasing of euro against US dollar not just was about the stronger euro, it was also about the weaker USD. Let's go here, USD. Sorry, you can see here the USD, this falling USD yesterday was the reason. Another reason also to see the euro USD in uptrend, it's increasing, but not at the uptrend, actually increasing at the short term. But Euro 50 was under pressure. Widely expected. Why? Because we had hawkish policies. So overall, in the stock markets, not just in the euro, not just in the Europe, UK and United States, we can see the stock markets a little bit under pressure with the hawkish policies that generally we are seeing from the central banks. That's the reality that happened in the market. That was the real expectations that we had earlier this week. And I was talking about that this is not what is happening. And what this increasing the stock markets right now is a little bit out of expectations. For now, therefore, for year end, still, we are back to our earlier expectations to see some correction in the stock market, to see some downtrend in the stock market before starting an uptrend, before starting a bullish mood of 2022. So, and finally, the week ended with the Central Bank of Japan. Japanese Central Bank, BOJ, also took the first step of having the hawkish policies. The Central Bank of Japan also promised this earlier. They had a meeting just like a few hours ago. BOJ said that it will scale back the pandemic emergency stimulus after its decline in March 2022. Same as what European Central Bank did. They are also scaling back. They are ending, but the Japanese bank they are scaling back. They are not ending, but they are scaling back at least. So this is also the first step for Japanese Central Bank. That was the hawkish policies. That was the reason to see Japanese yen a little bit stronger against its crosses, especially against US dollar. Weaker US dollar with stronger Japanese yen, with increasing the market risk, all helps the Japanese yen to increase a little bit more in the market. So that's the uptrend reasons that we can see in the market. Downside, the uptrend for Japanese yen and downtrend for USD JPY. Because when the Japanese yen is increasing, USD JPY is falling down. And Nikkei. So stronger Japanese yen with the weaker Nikkei. Weaker Nikkei is the general market expectations. Same as UK, same as United States, same as European Central Bank, all of them, they are the things what's happening in the market. Now it is the reality of the market. Now it is they show that the earlier expectations that we had from the market. This is about the central bank and the conclusion of their meeting and their decisions, what they decided they met. And let's go to see the others. Let's say about the gold and other symbols. With increasing the market risk, gold is increasing. Earlier expectations of having the gold around 1,800, something like $20 plus and minus. Still, we are in the same expectations for the gold, and gold gonna stay in at the same levels that we are expecting. Nothing changed for the gold. Crude oil. Oops, this is P500. No, this is a crude oil. This is a crude oil. Crude oil. It's not. We are not expecting to see the higher numbers for the gold, for the crude oil before year end, before starting the new year. In the new year, before starting the uptrends in the market. This is still for now. For today, also we are expecting there's a little bit downside here. Actually, not the downside even. The gold, the oil expectations for oil is still same expectations that we had earlier this week, somewhere around $70, $71, $72, about 70, but not so high for the oil till year end. In the crypto market, Bitcoin again is back under its down. It's a trend line under a trend line. You can see here. Still, as we were talking at the last days, we do not have enough reason to say that Bitcoin started to uptrend. Not from the technical point of view, not from the fundamental point of view. None of them. We do not have the reason to see the Bitcoin or other cryptocurrencies they are increasing. So still we are in a downtrend for the Bitcoin. For the Ripple also is the same at 81 cents. For Ethereum also is the same. All of them they are again back under the trend line. For now, we don't have a reason. As I told, we don't have a reason to see that it's going down. You can see that even for the from the technical point of view, Ethereum is showing very bad signals for the falling. So we can probably wait for a little bit sharply fall in the Ethereum. Whatever here, we don't have a positive sign. So this negative sign for the downtrend sign are much more than the positive and uptrend in cryptocurrencies market. Still the same overall outlook that we had. Okay, guys, hope it was useful for you. Let me know if you have any idea if oh, the sign above, it's a little bit, have to December 17, it's a December 16. Let me know if you have any idea, and is there anything to change, or if you want me to add something, or make it smaller, shorter, longer, whatever you need. Let me know your idea in the comments. Thank you so much, and see you guys all tomorrow. Bye-bye. Oh, sorry, not tomorrow, Monday. That's the last day of the week. See you guys all Monday. Bye-bye. Have a good weekend.